The Stock YouTuber Tier List 2026, from beginning of the year until now. My team and I did something kind of obsessive. We tracked the results of 9 popular investment YouTubers. Who's the best stock picker? And who is the worst? My research team and I went through literally hundreds of videos of popular investment YouTubers. We recorded every strong buy, every casual mention, every "I'm loading up on this right now." We timestamped it, we tagged it, we recorded the exact stock price on the day the video came out, and then we checked what happened. Of course, we also used AI to help with this, but still it was a massive effort to put all of this together. And the results? Well, some of these guys crushed it. And some of them, well, let's just say you would have made more money just leaving your money in some savings account. But, and this is really important, I have to say this up front, this is a very short time window. January to mid-April 2026. That's 3.5 months. And in investing term, that's a blink. A stock that's down 25% now could easily rip 60% by December. So please don't treat this as a final verdict on anyone. But what this is a snapshot. And we will keep checking in the coming videos whether the short-term thesis behind these calls actually played out. So let's rank them. Quick rundown of what we did. We went through about 135 videos across 9 YouTube channels. The channels are ticker symbol U, Jerry Romine, Daniel Pronk, Felix and Friends, Chris Sane, Couch Investors, Swen Carlin's Value Investing Channel, Everything Money, and Financial Education by Jeremy Lefebvre. For each video, we pulled every stock recommendation and categorized it. Strong buy, regular buy, watch list, mention, sell. Whatever the creator actually said. Then we tagged every pick with the stock price on recommendation day and compared it to today's price. That gave us 230 unique stock picks across those 9 channels. And now for context, the S&P 500 is down about 5 to 7% year to date. So the market itself hasn't been kind to anyone. Keep that in mind as we go through this, because even a slightly negative average return might actually mean someone held up better than the broad market. Let's start at the bottom and work our way up. Number 9, Daniel Pronk. The win rate 13%, average return minus 9.5%. And look, I feel a little bad putting him last because his content is actually really thoughtful. Daniel is a quality compounder guy. He likes businesses with strong free cash flow, wide moats, predictable earnings. Constellation Software, Mercado Libre, Shopify, Visa. On paper, these are great companies. But in this window, they got hammered. His worst pick, The Trade Desk, dropped over 41%. Snowflake fell 37%. Even Microsoft, which he had as a strong buy, shed over 20%. His only real win was Netflix, which was up about 14%. Here's the thing though. Daniel's style is built for years, not months, so he'd probably be the first to tell you that. So take this ranking with a massive grain of salt. Number 8, Couch Investor. Win rate 23%. Average return minus 7.6%. 32 picks, only 7 winners. That's rough. The biggest problem here was concentration. Couch Investor went extremely heavy on SoFi, with 20 separate mentions and a strong buy rating. SoFi dropped over 40%. That one pick alone dragged the entire average into the ground. His best call was actually Intel, up 54%, and Nebius Group rallied over 51%. But when your highest conviction bet falls that hard, it's tough to recover. I should mention he was also big on Rubrik, which dropped 39%, and Novo Nordisk down 41%. That portfolio had some serious damage, my brethren. Number 7, Financial Education, Jeremy Lefebvre. Win rate 30%, average return minus 10.1%. Is this going to pay for his Ferrari? Questionable. Jeremy is probably the most transparent stock YouTuber out there. He shows his exact positions, dollar amounts, buys, sells, everything. You know exactly what he's doing. But this quarter punished him. His biggest conviction call was SoFi. same as Couch Investor, and it got the same result, down 44%. That's his worst performing pick. He also got caught in the Palantir drawdown, which he'd been buying at around $179 and watched it slide to $130. Nike down 32%. PayPal down 20%. You gotta be flipping my flapjacks. It's a massacre. His wins were also there. Micron up 22%, Netflix up 20%, but they weren't enough to offset the losses. So when your bottom picks are dropping 30 to 40%, you need your winners to be doing the same thing in the other direction, and they weren't. Number 6, Chris Sane. Win rate 41%. Average return minus 1.7%. Chris is interesting because he had by far the most picks of anyone we tracked. 40 unique stock recommendations. He's constantly talking about what he's buying. And he had the single best performing pick of any YouTuber in this study. Vertiv Holdings up over 62%. Caterpillar rallied 28%. Lockheed Martin up 22%. And he found some real gems there. But then you look at the other side, IonQ dropped 45%, Robinhood fell 43%, Lyft down 31%. So here's my read on Chris. He throws a lot at the wall. Some of it sticks, and when it sticks really well. But the losers are very, very, very ugly. If you're following him, you better be diversified enough to absorb those hits. Also, side note, he was one of the few creators who had positions in gold and energy. His SPDR, Gold Trust, and ExxonMobil picks both worked out very nicely. So there's a macro awareness there that some of the pure tech guys are missing. Number 5, Everything Money. Win rate 41%, average return minus 3.5%. This channel does deep fundamental analyses, baby, please. They run stocks through their stock analyzer tool. They look at valuations. They're pretty systematic about it. Super nerdy. And I respect that approach. The best call was Target, up 23%. They also nailed Generac and Bristol Myers Squibb. Some solid value picks in there, but they got burned on the big tech names. Adobe, which was strong buy for them, dropped over 30%. Nike tanked 30%, and they got hit on Alibaba and PayPal too. The interesting thing about Everything Money is their conviction ratings don't always correlate with performance. Some of their strong buys underperformed their regular buys, which is something to think about. Number 4, Felix and Furry Friends. Win rate 45%, average return minus 2.3%. Felix had the fewest picks of anyone, just 15. And honestly, that restraint might be what saved his average. He and his dog are macro and commodities guys. JP Morgan Chase, Goldman Sachs, gold, silver, energy. Very different portfolio from the AI crowd. His best pick was ExxonMobil, up 26%. Chevron returned almost 20%. RTX, the defense contractor, up about 5%. And his worst call was AeroVironment, which cratered 43%. Oh my fucking hell. But that's kind of an outlier in his otherwise pretty conservative portfolio. Felix reminds me of the uncle at Thanksgiving who's been buying the same 10 stocks for 20 years and somehow keeps doing fine. Boring? But boring can work. Tied for number 2, Sven Carlin. Win rate 50%. Average return plus 1.1%. In a market that's down 5 to 7%, Sven is positive. That's notable. And the way he did it is completely different from everyone else on this list. While the other 8 creators were fighting over Nvidia, Palantir, SoFi, Sven was buying Occidental Petroleum, Archer Daniels Midland, JD.com, Petrobras, a Norwegian oil company called Var Energi. He's a value investor in the truest sense. He looks at cash flow yields and PE ratios and dividend coverage, and he buys things that the market has forgotten about. Boring businesses, ugly charts, stuff nobody makes YouTube thumbnails about. His best call was OXY, up 35%. Archer Daniels Midland rallied almost 15%. And his worst loss, Flower Foods, was down 26%. But it was only one pick. What really stands out though is what Sven didn't buy. He's openly bearish on Nvidia, Tesla, and most of the mega cap AI names. He called them overvalued. And for this 3 months window at least, he was right. Almost every creator who went heavy on those names got punished bad. 21 picks, some wins, some losses, with a positive average. In a down market, that's clean. Also number 2, ticker symbol U, win rate 50%, average return plus 2%. The highest average return of anyone we tracked, and he did it while going all in on the AI trade. Nvidia, Google McDougal, Microsoft, Amazon, Meta, Taiwan Semiconductor, CoreWeave, Nebius. This is a guy who looked at the AI infrastructure build out and said, I'm betting everything on the picks and shovels. His best pick was Nebius Group, up 39%. Lumentum Holdings, up 37%. Western Digital, up 34%. Coherent Corp, up 29%. Intel, up 27%. When he wins big. But he also had some spectacular misses. Iron, his AI data center play, dropped 38%. Tesla fell 21%. Palantir down 21%, and Microsoft, one of his highest conviction strong buys, shed almost 19%. What saved his average is that his winners were bigger than his losers. The wins were in the 25 to 39% range. The losses were mostly in the 15 to 21% range. So even though he had an equal number of each, the math worked out. But here's the thing about ticker symbol U. He's making very concentrated, very directional bets. When AI is ripping, he'll look like a genius. When it's not, those drawdowns are going to be brutal. This quarter, it went in his favor, barely. Number 1, Jerry, win rate 54%, average return roughly break even at 0%. Wait, how does the guy with a 0% return beat the guy with a 2% return? Because I weighted the ranking on both win rate and consistency. Jerry had the highest win rate of all 9 creators, and he did it with 27 picks, which is a meaningful sample size. His best pick was also Nebius Group, up 47%, Taiwan Semiconductor, up 15%, AMD, up about 16%, Arista Networks, and Coherent Corp, both solid double-digit gains. He even caught Walmart for a small win. His losses were there too. Heckler Mining dropped 33%, Applied Digital fell 27%, SoFi, which keeps showing up like a recurring nightmare across multiple channels, down 26%. But here's what separates Jerry. His wins and losses are more balanced in size. He doesn't have these 40-50% drawdowns that some of the other creators have. His worst pick was down 33%, which is bad, but compared to the 44% and 45% drops that we saw from other channels, it's almost conservative. Jerry strikes me as someone who does his homework but doesn't get married to a thesis. He'll take the L and move on, and in a choppy market like this one, that flexibility is really what matters. Alright, so what did we learn from tracking 230 stock picks across 9 channels? A few things jump out. First, SoFi was a disaster across the board. 3 separate creators had it as a strong buy or heavy position. It dropped over 40% from where each of them recommended it. When multiple YouTubers are all piling into the same name and it's a small cap growth stock with no earning cushion, that should probably make you nervous. Second, the old economy guys quietly outperformed. Sven's oil and agriculture plays, Felix's energy and defense picks, Chris Saint's Caterpillar and Lockheed Martin. The stuff nobody makes exciting thumbnails about, That was the stuff that actually worked this quarter. Third, more picks didn't mean better picks. Chris Sane had 40 recommendations, Daniel Pronk had 18. Chris averaged minus 1.7%, Daniel averaged minus 9.5%. But Felix had only 15 picks and finished fourth. So the volume and the quality aren't the same thing. Fourth, strong buy ratings didn't predict better returns. Across nearly every channel, the stocks labeled as strong buys or highest conviction didn't consistently outperform regular buy calls. In several cases, they underperformed. And fifth, the one that matters most. Overall, the 9 creators combined for a 38% win rate. Less than 4 out of 10 picks actually went up. Now, remember, the market was down too, and some of these losses are stocks down 2% in a market that's down 6%, which is actually outperformance, but still, 38%. That number should make you think twice about blindly following anyone's stock picks on YouTube. So I want to end it where I started. 3.5 months, that is a short time window. If we would have done this study during a bull run, the rankings would look totally different. And honestly, the best investors in history have had terrible 3-month stretches. Buffett has had 8 years where he underperformed the S&P 500, but that didn't make him wrong. Maybe he was just early. So the actual takeaway is not to follow anyone blindly, but use all of these investment YouTubers as your own starting point for your own research. And most importantly, we are going to keep tracking this. I'll do more updates in the coming weeks and months as we go, and we'll see if these rankings hold up or if they completely flip, which is very likely to happen. So if you want to see that video, subscribe and I'll make sure it happens. Alright, see you in the next one.